Comments made on the following paid commercial program are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time.
Welcome to the Money and Wealth Show. On the program this week, David Ingram's tax tips, money commercials, and we'll take a look inside the Canadian small cap mining sector with this week's special guest, Larry Reaugh. Welcome to the Money and Wealth Show. I'm Sterling Fox, and our special guest this week is a 47-year veteran of the Canadian mining industry who's been running public companies for over 30 years. He is the president and CEO of American Manganese Incorporated. He is Larry Reaugh. Larry, welcome to the show.
I'm happy to be here, Sterling.
It's good to have you with us. You have been a longtime sponsor of our program, and it's about time, I think, that we gave our viewers an opportunity to learn a little bit more about small cap Canadian mining companies. What's the biggest challenge facing you in this fall of 2010?
Strangely enough, it's the ability to get financing and the ability to get investors to buy your shares on the market.
So, is it financing from the banks that's difficult, or is it that private fund of capital from investors that's more difficult?
It's quite difficult to get money from the investors individually themselves, although we've been successful at doing that at smaller amounts than usual. And the brokerage firms themselves are, not completing on some of the smaller finance and not interested in financing, for example, pure exploration plays. If you have a copper-gold situation that's a well-developed copper-gold situation, you are apt to get financed. And if you have a very large gold resource, or else you're drilling in a new area where you've made a discovery of what could grow into large resources, you will get financings. But if you're just doing geophysics and geochemistry and wanting to get out there and do that type of work before you're going to drill your holes, which you eventually have to do.
Sure.
Nobody's interested in financing grassroots right now.
And does that boil right down to the motivation of the individual investor to want to invest in these small cap companies, Larry, in a recessionary time? Does that make it doubly challenging?
Makes it doubly challenging. What you had happen in 2008 was a wipeout of investors' money. I mean, 95% of their money was wiped out, and including the promoters that had their fully invested in their own paper. You've watched your stocks drop 80-90%. Mm-hmm. So you're starting from the very bottom again. But an investor who's lost all his money and may have had bills to pay, doesn't have that money to go back into the market. So we've lost a huge resource there in investors that used to take a shot on a penny stock.
When this haircut for investors took place a couple of years ago, was it equally shared across the spectrum of large cap, mid cap, and small cap companies in terms of losses to investors, or did the small caps take it on the chin more so than the other two groups?
No, it was across the board. Even the large cap stocks, I'm thinking of U.S. Steel, for example, mm-hmm. at $220 a share, finally ending up at about 18. Now that's a big haircut.
Sure.
Same as a stock at 60 cents going to 6 cents in the junior realm. But those stocks have started to come back, and if you're in the resource side, you'll see that they've came back and they're back up almost to within 50% of the or 25% of their last high. Not all of them, but a lot of them are. But the juniors are still down there mucking around somewhere in the bottom of the trough. And so the investment just did not come back into them in any significant way.
There's I don't know what I would call it, perhaps a mistaken identity problem that small cap companies have. Real or imagined, they're perceived by a lot of investors, Larry, as being particularly high risk. First of all, is that real or is it imagined?
It's very real. You know, you cut your risk by doing your due diligence on a company. The first thing you look at is the management. It doesn't matter what the product is or anything else. If the management's not there to carry it through to fruition, you'll never see the end result of making a lot of money. Second thing, of course, is you look at the project, and then you look at the ability to raise the financing to carry the project through. Those are the things that the investors have to look at. Right now, gold outshines anything.
Mm-hmm.
As you may have noticed, silver has suddenly started to come back up.
Right.
Now, silver is an indicator that things have changed. You know, I do a newsletter that I started in the early or late 2008 when the market collapsed, in which I foresaw the prices coming back in commodities, and that was what it was all about. And I did mention at the time that silver was not going to play like gold, that it was an industrial metal and it would play like an industrial metal. Well, that role has changed now. It's now become more of a currency. Call it the poor man's currency.
Mm-hmm. Mm-hmm.
But here's people paying up to $1,300 almost today for an ounce of gold.
Right.
So in the last, 3 weeks, silver has broken out of its mold and it's over $20. It hasn't seen that in 30 years. And so it's telling you the investors are coming back into silver. I see that as a precursor to the junior stocks. People are looking for value, so they'll be looking for less rigorous guidelines, for example, 1 million plus ounces, advanced copper gold plays that are into feasibility stage, for example. They'll start to look around at deposits of 100, 200, 500,000 ounces that could be brought into production and make the company some money, right? Because let's face it, not everybody's going to have 1 million plus ounces. It's just not going to happen.
Sure.
All those world-class deposits are being drilled today, and they're getting tougher and tougher and tougher to find. Of course, we're getting bigger intercepts. The higher the price of gold goes, you know, the greater the low grade becomes. I mean, low grade is, which was considered low grade, would be 3 grams or 3.5 grams. Now it's then it was 2, then it was a gram. Now it's less than a gram. The dynamics are there because of the price
less
of
than
gold.
a gram per what? What's
Per
the
ton.
Per ton? Okay.
That's a minuscule amount of gold
Sure.
for a ton of rock that's crushed.
Right.
So, you know, these things are weighing heavily on the investor's mind. They like to go where the analysts go. It's, you know, follow the herd has always been the way of the investor, and that always works to a certain degree. Contrarian, he looks for things that are overlooked and undervalued. And there's a lot of them out there that are overlooked and undervalued today. So you have to look at it as a business opportunity. And the business opportunity is if a project can make a whale of money and it's not in gold, it will soon be discovered. And it may be underpriced. And that's where you want to be.
All right, our special guest today on the Money and Wealth Show is the President and CEO of American Manganese, Larry Reaugh, and we'll be back with lots more.
Hi, I'm Larry Reaugh, President and CEO of American Manganese, Inc. Our project in Arizona is electrolytic manganese. We have a resource of 11 billion pounds, currently trading at $1.40 a pound. Our cost, 44 cents. For more information, go to our site at americanmanganeseinc.com or phone me direct at 604-531-9639.